Pruksa, I do want to start with what we're seeing in terms of tech in South Korea at the moment. Those numbers from Samsung, pretty much as expected. We were not expecting great things there. SK Hynix not terrific yesterday either, but neither of those companies getting punished by the market at the moment. What's your outlook for semiconductors around the region, and would you be adding semiconductors to your portfolio at the moment?
Yes, good morning, Paul and Sherry. Thank you to be back. And I think overall we are starting to turn more positive on the semiconductor sector as a whole, perhaps since the start of this year, actually. And I think that's really because I think we are starting to see earnings expectations being cut by the market as per what we are seeing with Samsung and SK Hynix as well. And I think that you can say that with where the share price is trading today, it seems that bad news is good news. You are seeing production cuts coming through as well, and that should help to basically normalize the oversupply situation in the market today. So we do look forward to a better second half as well.
We also had some encouraging numbers today out of Meta. Yesterday, Microsoft, Alphabet, not too bad either. How are valuations looking around that broader tech space to you?
Yes, so I look more at the Asian equities level, but I think generally when you look at the whole semiconductor space or the tech space, I think what we are seeing is that people are pricing in a lot of bad news and perhaps have not looked forward enough and taking a longer term perspective for the structural long-term growth opportunities that these stocks will still be able to deliver. And what's pertinent for us when we look at the results from Google, Microsoft, Meta is really the capex that they are still continuing to spend in servers, because that has implications to the Asian supply chain. And I would say that what we see so far is that relatively better than expected as well. So that should give some support to the Asian supply chain in the second half of the year.
The expectation right now is that the economic outlook will get worse from here later in the year, many calling for a recession here in the U.S. and perhaps in other parts of the world. What will that do to tech spending and just corporate spending in the tech sector broadly that could potentially impact this sector?
Yes, I think this means that you have to be pretty selective with the overall tech sector of where we want to invest. And I think sticking with the quality names that are the leaders that are taking this situation in the market to be able to take a longer term view to continue to invest as well. So if you look at some of the R&D expenses by the likes of Samsung, for example, that hasn't really changed dramatically. Or you look at the Taiwanese player as well, and that's really because they are taking a longer term view, and these are strategic investments. I think the other point that is also good to note with regard to where we are today is that earnings have already been cut. So the tech sector has already gone through the pain, and the valuations do provide some buffer for tougher times ahead as well.
We, of course, were watching the regional lending turmoil here in the U.S. This week, especially with First Republic. We got UOB out of Singapore reporting today as well. What do you make of the banking sector across Asia and the possibility that they will be hit with credit conditions tightening?
I think the banking sector across Asia remains pretty healthy when you think about the type, at least, the ones that we own are the quality ones. And therefore, what this means is that they control their credit quality. And when conditions start to tighten, they would be the one that should be able to weather through the storm. So I think things are getting tougher, certainly. But overall, I don't think we are looking at a volatile situation as we have seen in the West. And that's really because we do think either from a macroeconomic perspective or from a balance sheet perspective, Asian banks are actually better placed. But that said, I think from the beginning of the year, we have taken off some money, but that's also because from a portfolio perspective, they have actually done very well for us. And we have shifted the money elsewhere to underperforming names.